Hey guys, welcome to my free training. This training will be on building your credit building strategies. This is the most misunderstood thing in the credit industry right now. And that's why I decided to make a free training on it. Whether you're trying to buy a car, buy a home, or get business funding, the things that I'm going to teach you and talk about here today will be able to help you in every single area because good overall credit health is really where you want to be. So it doesn't matter that you're trying to buy a car or buy a home. Having a good profile will get you the lowest and best rates no matter where you go. So if you are able to apply these strategies to your profile, not just watch it and walk away and forget about it, but if you actually apply and take to heart these things, I guarantee you that you will never get denied for anything ever again based on your credit. Now, DTI, that's a whole nother story. But if it's based on your credit, you won't get denied. So let's jump right into it. The most important factor on your credit is payment history. Even if you look at the scoring models, the FICO model, even if you look at the Vantage model, the most important thing is payment history. We all know that a late payment can drop your score 100 points. And I know this not because I've had one, but because I have a credit repair company. I've seen what late payments do to people's profiles, and it's being able to understand the system really shows you how to combat them. Late payments don't always need to be combated with credit repair. Sometimes late payments just need more accounts, right? So payment history, let's jump into it really quick because we have a lot to cover today. So when it comes to payment history, where you want to be, 100% on time. If you have missed payments, you won't be at 100%. The next best thing is 99%. I would not go below 99%. And anybody can get back to 99%. It just takes time and it takes work. So your payment history is based on an on-time payment percentage, which is really a running average, right? So say that last year you had a card for 10 months, you made 10 payments, you missed one. Your on-time payment percentage is 9 out of 10, 90%. 9 out of 10 payments made on time, that gives you 90%. Now, say that you continue to do that 10 more months, now you're at 19 out of 20. That is 95%, right? The key here, especially when you've missed payments before. Now, if you haven't missed payments, just bear with me because maybe you'll miss one. Hopefully you won't, but you'll know exactly what to do. So if you've missed payments before, the first thing I always recommend doing is one, going ahead to open up new accounts. And the reason why you want to do this, say this scenario from before, right? You were at 9 out of 10. Say that this person, instead of just waiting another year, hoping his credit would fix itself, say that they went and put on 9 new accounts to their profile, right? They put on 9 new accounts. Now, obviously, when you add 9 new accounts, that's a lot of new accounts. It's going to drop your average age, which we'll talk about later. But say that they put 9 new accounts just for this example, and they made all of those accounts on time for 10 months. That means they gained 90 on-time payments here. So now that you've gained 90 on-time payments, and then once we take this average, he's going to be at 99 out of 100 payments. Now, instead of being at 95%, once that 10-month period has finished, he's at 99% on-time payment history. Bingo. That's where he needs to be. And obviously, over time, as he continues to make his payments on time, his payment history percentage will go up. But, once you've missed one, there's no going back to 100. Well, maybe if they round it, but still, that's besides the point. So that's what you do. Payment history is the biggest factor. When you have late payments, you're going to get higher rates. You won't even be able to qualify for funding a lot of the time, especially when you've had a late payment within the past 2 years. The past 2 years of history is heavily looked upon. Now, if it's more than 2 years old, you may still be able to slide by with some programs, but some programs, Even if it's more than 2 years, they may still approve you, but they may give you a lower limit. And obviously, we want the highest limits possible, the largest amount of funding as possible. So these are things to keep in mind. Building out your payment history percentage will definitely go a long way. Secondly, is utilization. And utilization is so key because even if you have a perfect profile, you'll still get denied. If everything on your profile is perfect except utilization, you'll still get denied. And usually we've seen the denials start happening right around 35%, sometimes 30%, sometimes lower. It really varies depending on how strong the profile is, how much available credit, things like that, right? Ideally, right? I always tell people you want to be below 10%. 1 to 6% utilization gives you the maximum score. So if you go to 0, you drop a few points. If you go above 6, you drop a few points. So 1 to 6% gives you the maximum score, but ideally, what I tell clients that come to us for funding is be below 10%. Get below 10%. This is not because you'll get denied at 12% or 15% or 20%. You'll probably still get approved. But one, the limits, we want the highest limits possible, meaning we want the best profile possible. So if 100 people walk into the bank and they all want funding, and the bank only has they only have $100,000 left. We want the biggest bag. So you got to realize that this is a competition between you and the next person that's trying to get funding to start up their business. So, and how you make yourself look better is having a stronger profile. So, what I always tell people, don't shoot for the bare minimums. We will go over the bare minimums, but don't shoot for the bare minimums. Shoot higher than that. Shoot higher than the bare minimums, right? So ideally, you want to be below 10%. Utilization is key because, like I said, you can have a crystal squeaky clean, perfect profile, no inquiries, great age, great payment history. If your utilization is too high, you'll just automatically get denied. You'll automatically get denied. Now, if you have really high utilization, some things you could think about is possibly taking on a bridge loan. We do have a few companies that do that, where say that you have 90% utilization. We know that as soon as your utilization goes down, you'll get approved. You can get a bridge loan from us. You can get a bridge loan. That way, we pay down your credit cards temporarily and then get you the funding, and then you pay us back. That can happen, but that's only for very specific cases. I mean, you still have to have a really strong profile to even be able to qualify for that program. Okay, the next topic is age. Age is usually a big thing for people after they've gone through credit repair, or if you've just been spending your whole life not doing anything for your credit. Typically, after people have gone through credit repair, they have very little age because most of their cards and like accounts were wiped off. Maybe they went bad. So now they're pretty much starting from zero. And honestly, age is probably one of those things that is really hard to build organically just because it takes time. So, say that you just went through credit repair, now your profile is blank. If you're talking about building up age, building out your profile, this could take anywhere from 6 to 12 months to just build it out. Now, obviously, there are faster ways, but time is the key to age. I mean, the title of the section is age. Age is literally time. You can't rush time. So, but there are ways to build it that are not organic, and that's going to be trade lines. Trade lines are the best way to rapidly age your profile. Now, they still have their limitations, but trade lines hit a lot of areas for your profile, right? So, when it comes to trade lines, good ones for your age are going to be authorized user trade lines and primary backdated trade lines. So these will show up as paid off cars, um, homes, and personal loans. And I mean, primary backdated trade lines that go up to a $1.2 million mortgage. So you can add these to your profile to make it look really good and give it 20 years, 15 years of history for your oldest account. So these are really good options, right? Now, having a backdated revolving account is going to be a little bit more difficult because typically backdated accounts they report as closed, and a closed credit card to me is not really as beneficial as having something that's paid off like a car, home, or personal loan. We tell them, hey, they're not really the best option. A common misconception that people have about these AUs is that they actually help your utilization. But what I can tell you for sure is that if your utilization is 90% and say that your cards are maxed out 10K out of 10K and you throw on 90K AU, you're still going to get denied. Just because Credit Karma says your utilization is now 10%, 10K out of 100, you're still going to get denied from the bank. The bank is going to send you back a letter saying your balances are too high, your utilization is too high. That is why you got denied. I guarantee you this. So don't waste your time buying those authorized user lines thinking that they'll be able to hide your utilization. That's not true. Now they will help your score, but hiding your utilization, no. Giving you age, yes. If you want to hide your utilization, there are different strategies. One would be transferring the balances from one card to another, especially if you have multiple cards. There are ways to transfer the balances, and you just transfer them right after your statement closes. That way, when the card sends the information to the bureaus, it appears like you have a zero balance. And if you set up the close dates properly, you can kind of cycle the balances so your utilization stays really, really low. The second way would be to get primary revolving trade lines. Primary revolving trade lines, I haven't seen someone else that has them, but we have them. We have them with lines of credit that go up to $15,000. So now, if you don't have really high credit, like usage, say that you have 5K of debt, you could probably add that to bring it down right to 20%. But if you have $50,000 in cards, throwing on that 15K line of credit is not really going to do much for your utilization because that's not going to get you low enough to be able to get approved. Those are two things. That's going to be hiding utilization with multiple credit cards. You have to have more than one credit card to do this. And then primary revolving trade line. Now this has to report as open. And adding on those credit builder accounts to your profile, we'll talk about that later. What kinds of accounts do you need? This is the biggest thing. If you're trying to go for funding, I'm only going to say this once, so listen up. You want to avoid credit builder accounts. Credit builder accounts make it seem like you just went through credit repair. They make it seem like you are in the process of rebuilding your credit. You do not want those on your profile. Yes, they will boost your score. Yes, I'm not fighting that. But if your long-term goal is funding, you do not want those on your profile. The better strategy, especially if you just went through credit repair, maybe you can't get approved for like anything quite yet, maybe your age, whatever it is to get a secured card. A secured card is much better. One, you start building banking history with a real bank, because one thing you'll notice is that sometimes when you go to apply for either personal cards or business cards, what they'll say for your denial is that you don't have national banking history. So go ahead and start building out your national banking history with a secured card. Go ahead and get one from Bank of America, get one from Discover. You can, I'm not going to say Capital One, but Capital One does have one. The reason why I'm not going to say Capital One, we'll talk about that later. Go and get a secured card, Navy Federal, right? Get these secured cards. And that's if you cannot get approved for a card that is unsecured. That's way better than your credit builders. And also, one thing about the secured cards, right, is that usually after 6 months or so of good payment history, you managing the card well, you will be able to get the card to become an unsecured card. And then they give you back your money. And what's so good about this is that it doesn't reset your credit age like you got a new card. It still keeps that age and the payment history that you've built up so far on it. So now you have a unsecured card, and when you go to apply for something else, the banks won't know that this card was previously a secured card. They just see you a regular credit card now. That's what they see on your profile. So, and then secondly, I actually heard somebody say this before, is that it actually shows the banks that you have money. If you have money tucked away to the point where you can just have it securing a debt, that means you have some kind of money. You have some kind of free income. A lot of people, they may not even have $200 to put up for a secured card. Talk less of a secured card that's like 1,000. If you go through NIH, you can get a secured card up to $25,000, right? So get the secured card over the credit builder. The second reason for this is that that credit builder is going to cost you money every month, right? Secured cards are free. And the reason why, sure, when you're building out your credit, you think, oh, $10 a month, that's nothing. $35 a month is nothing, right? And it's not a lot of money. That's true. But when you're paying that every month and you've built up your credit to the point where you don't need that card anymore and you close it, since that is the oldest thing on your profile, your score is going to drop. So, and that's why people get stuck in them, because they realize that, oh, I can't close this credit builder because this is the best thing on my profile. This is my oldest account. If I close it, my score is going to plummet. Don't even put yourself into that situation. Save your money, get the secured card, use it responsibly. Your card becomes unsecured. Boom. Point blank, end of story. So, and that's if you're just starting out. But what your profile should really look like is you need high limit credit cards, high limit personal credit cards, and I would say limits above $10,000 on your personal. Now that is good. Now, if you're shooting for bare minimum, you know, having a personal like limit of $10,000 combined, it's bare minimum. You know, I'm not going to say it's good, it's bare minimum, right? And just like we talked about earlier, bare minimum is not where you want to be. You never want to be in bare minimum. That means you're at the bottom of the barrel. So when things tighten up, you're not getting anything. It's only the people at the top that eat. It's the people at the top that eat the most. You're not getting anything if you're at bare minimum. So that's what I tell people. High limit personal cards above $10,000. Maybe you don't immediately get approved for a card that's $10,000, right? But you can build it out over time. Regularly request the credit limit raises. And when banks see that you have higher limits already, you're going to start off with higher limits with them because banks judge you based off of what you have. So high limit personal credit cards. Second, you need a good mix of accounts. If you just have 10 credit cards, you're not doing so well. If you just have 10 car loans, you're not doing so well. You need a good mix, a couple credit cards, couple car loans, couple mortgages. Well, maybe a mortgage. You don't have to have a mortgage, but a mortgage is good because that adds to your mix. Personal loan is good. That adds to your mix. These things are good. Most people typically have a car loan and a couple credit cards. That's where the average person is. Some people have a mortgage, some don't. That's fine. If you want to get a personal loan, a good way to do that without actually having to borrow the money is to just do a pledge loan. Do a savings secured loan, put the money up, get the loan, pay it off 99% so you get out your money, and then boom, now you have a personal loan on your profile. So that's just something else that you can do to add to your mix. Obviously, if you don't want to go into debt and you just want to buy a trade line, paid off car, home, personal loan, you can do that too. That's going to add to your mix, and that's going to give you payment history crazily. We've seen where putting on a paid off car or home or personal loan, whichever one, it can add 130, 150 points to your profile just because of the backdated history. And that's especially true when you have a thin profile. That payment history from years and years of payments is being thrown onto your profile. It can add a lot. And we've also seen where people have had these accounts for 10 years and they drop off of their profile and their score plummets 170 points, 130 points because they didn't replace it with another account. They were just riding that wave for 10 years. That wave ended and now they're down bad. But these are also good ways to build out your mix, right? Building out your credit mix. Credit cards and lines of credit. You can also get lines of credit. A good program that has lines of credit that I personally have is North Carolina State Employees Credit Union. They gave me a $50,000 personal line of credit. I'll take it, right? Not every credit union is like that, but I lucked up because I was part of it. And yeah, so look for a line of credit, personal line of credit that you can add to your profile, right? We do have the primary revolving personal lines of credit also that you can add to your profile. Personal loans, car loans, mortgages. They also have some people sell primary trade lines. We have them too, but they're like a sales installment contract. That's how it reports to your credit saying, I'm sure that helps your mix. So boom, this is what your ideal profile looks like, right? Great payment history, low utilization, lots of age. You have high limit personal credit cards. You have a good mix. You have credit cards, you have lines of credit, you have personal loans, car loans, preferably mortgages, sales installment contracts, right? And this may sound like a daunting task, like, oh, I got to add all these things to my profile, but you can do it. And the best part about it is if you're smart about it, you can do it without taking on a bunch of debt. Now, obviously, if you don't want to take on the debt, you'll have to pay to be able to add on lines, but it's possible. The cheapest way to do it is to, when you need a car, buy it with a loan, right? When you borrow money, that helps to build your profile. Then paying it off on time, that helps to build your payment history. The last and final thing I'll talk about is hard inquiries. Ideally, I always tell people below 3. Some people say below 4, below 5. You can be below 4. You can be right at 4 and still get approved. We just had a client that was right at 4, got approved for a $50,000 business card through Chase, right? He had 4 hard inquiries. I'm not saying that you won't get approved, but ideally, especially if you're trying to make a longer funding run, you want to be lower. And that's just because you can hit more banks before you have to stop and go and wipe off the hard credit inquiries. So if you have 2, you can probably hit 3, 4 banks and then stop, wipe them off, and come back. So low, hard inquiries. And one thing to note about hard inquiries is, especially if you're building out your profile from scratch when you went through credit repair, don't be in a rush to build it out. Build it out smartly. And I say that is because we have people whose profiles, they just went and got these cards, stacked them all up, and picked up a bunch of hard inquiries that they cannot remove without shutting down the cards. So when you're building out your profile, make sure you're being very, very efficient with your inquiries. One of my favorite places to go, Service Credit Union. 4 credit products, 1 hard inquiry. You also can do the like Apple Card, GM Card. We all know that play, right? You can pick both of those up without putting on a hard inquiry to your profile, even though they're still new accounts. But after you've aged them for a year, they have a good amount of payment history on them. But if you went to like a Capital One, they're going to pull your credit 3 times, 1 per bureau. You're already starting off badly. So make sure you start good. Choose banks and bureaus that you can get multiple products from with 1 hard inquiry, or even better, that you can get a product from without picking up an inquiry at all. that is the best thing you can do. So, and that's how you keep those hard inquiries low. Now, if you've already built out your credit, removing them, right, especially if you applied for something and got denied, that's not a problem. That's pretty straightforward, pretty easy. You can probably do it. So, low hard inquiries under 3. That pretty much wraps up this tutorial. So like I said at the beginning, right? If you build out your profile this way, in this manner, with this goal in mind, you'll never get denied when you apply for something because of your credit. You will never get denied when you apply for something because of your credit, because you'll be more than qualified. You'll be more than qualified. And that's where you want to be, because banks tightening up. So like I said, you want to be at the top, not at the bottom. At the top, not the bottom. The people at the top get chose first. The people at the bottom never get chosen. All right. So have a blessed rest of your day. I'm glad you guys were able to watch this free training. Now, if you need help with your credit, or you need help getting funding, or you just want us to take a look at your profile, shoot us a message, click the link below, and we'll be happy to take care of you. All right, guys. Great talking to you guys. Have a blessed rest of your day. Thank you very much. Bye-bye.